You've been warned. I'm your host, Steve Van Metre, and thanks for joining me today. For weeks, we've been warning investors that are under position that a massive machine-driven rally was coming. And with momentum turning higher and prices turning higher, machines are getting ready to buy in a big way, and that will mean investors are once again mispositioned for a monster rally. Let's over to Goldman, where we picked today's story up. Well, we see, of course, machine positioning, the CTAs. These are systematic machines, which mean they buy based on a formula. Let's take a look at what we have from the future strats desk. The one-liner is equity positioning is still a buy. CTAs are 100% ranked for positioning on a one-year scale within our work. That is to say, positioning is at its highest it's been on a rolling one-year basis. To round out the week, we estimate CTAs bought a whopping $34 billion of equities, bringing their total position long of $91 billion. So you start to think about, what was driving the tape last week or what was moving the market. You can see $34 billion in buying alone is enough to push stocks higher, which is what we've been saying is going to happen, and it did. As we continue on, we notice the purchasing was heaviest in the topics. We reported that on the show last week, and we can see other products are starting to move as well. And now let's talk about the flows for next week. Baseline, prices flat. Volatility doesn't move. $20 billion of buying, $4.6 billion to the S&P 500. Note that in topics, which is the part of the Japanese stock market, the heaviest buying there, again, we reported that last week. We showed on our own proprietary reports, which validated it. Price up to standard deviations, volatility drops. We see $17.78 billion. That would be buying next week. That's huge. Only $5.4 billion in the S&P 500. Prices drop or down by 2.5 standard deviations. Volatility goes up. They sell $14 billion and $8 billion. That's a big amount in the S&P 500. Threshold to watch 4,073 to the upside. And again, we've been making this case that stocks are likely to go up because the U.S. stock market is not driven by earnings and fundamentals as much now as it is derived and based on machine positioning flows. You're seeing it right here. Now let's talk about Nomura. We note that Nomura in the past, they have very fast moving algorithms, and no surprise what do we see this week? No change in Nomura's reports. They are at long positions. They're 100% long positions. We note that on their broad CTA report, they show that CTAs have more to lever higher. So again, making the case here that we can absolutely see the market continue to rally as these systematic machines continue to buy and buy and buy. And what happens is you see one company buying, the other next company's buying on top of them, and then another one, another one, another one, and that keeps taking the market higher. And here's some further evidence of that. Let's head over to TD Securities. And what we can note by TD Securities, their machines are still net short. So they could be triggering some upside buying, short covering here in the near future. And again, all of this just takes the market higher. And let's go back to what we said last week on our show. And you can see we got the call right. Here we noted over 4,000 to buy on the S&P 500. Sure enough, that remained true, and the market has shot higher since then. Under 3,700 to sell. Those numbers now moving a little bit higher. Let's look at our own reports here. We've got our momentum is positive on the SPY, on the S&P 500. We're looking at the relative strength indicator at 64. Now remember, it doesn't get oversold till 70, but when you start to see these machine positions and how they're buying, they don't care if the market's oversold. But guess what? Another factor is also in play here. On Friday, companies started coming out of their corporate share buyback blackout. It's believed that about 23% of these companies are now buying, and they're worth expected to bring that number up to $4 billion a day just in corporate share buybacks here in the U.S. So again, more buyers coming back to the market. We look at the MACD, the moving average convergence divergence strategy, technical strategy, and it is a positive cross to the upside. Momentum Timer Pro, which blends 3 different technical indicators together to give you a much smoother look at the market, has 14 consecutive daily buy signals. Keep in mind, it's still 50% off. There's a limited number of those coupon codes left. It's in the description below. Grab it while supplies last. We told people, our subscribers, our pro subscribers on January 24th, you need to buy this thing, $3.99 398.88 at the open, and currently close at 405.68. Upside target is at 415, downside at 395. We note that we see across the Momentum Timer Pro report buy signals. What do we note on the CTA report, which is our historical mimic of the machine modeling? Now they're looking to buy, and all of a sudden you see it all starts to validate together here. Let's take a look at the charts now and see if what we're seeing in the machine positioning is validated, and sure is. Look at the volume profile here on SPY. We held that across the 200-day moving average. We gave the signal to our pro subscribers right here on the 24th, said, hey, you've got a clear signal here. The momentum is moving higher. The machines are moving up. Where can this thing go? Well, the next big move is up here in this 415 level. After that, a move back near all-time highs is absolutely in the cards now. Let's take a look at QQQ. Now, under full disclosure, we forgot to tell our subscribers on the same day that QQQ was also a buy. So we will now note that a buy at open on Monday, January 30th. We see the tech stocks have likely more upside than the broad market. Of course, we see corporate share buybacks coming back. We're going to see retail investors coming back into the market, chasing this higher. Institutional investors, hedge fund managers are all going to play chase to the machines. We've got the RSI at 68. MACD's got a positive cross. 13 consecutive days of buy signals. What do we know? We see that down here, the 1 month at a buy mid, a 3 month at a buy mid, the 6 month at a buy mid on that Momentum Timer Pro. CTA-Timer Pro nailed the call just as it's designed to do. Still 20 bucks. I am going to be raising the price probably Monday or Tuesday. So if you want in on the CTA-Timer Pro, link in the description below. Again, it's only 20 bucks going to 30. And once you understand how to leverage the machine positioning, well, you've got it. Well, here we go. You notice on the QQQ 1-year volume profile held beautifully. Now we know all the buyers are below here. Sellers are above. Now it's time to squeeze all those sellers and get them back into the market. Look for QQQ. Short-term move up here into 302, but otherwise the next big zone of selling doesn't get going until up here in the 317. So again, beautiful bottoming pattern here. The Momentum Timer Pro nabbed the signal, CTA-Timer Pro nabbed the signal, and use them together. You've got a lot of confidence in what your trades are doing. Let's continue on. Because here now let's talk about the bond market. We should note that in terms of machine positioning, there just isn't a whole lot of change here. A lot of these CTAs are still net short the market. Now, what you're going to see on our report is it shows you should be long, because our report goes and does a historical modeling and adjustment saying that as long as it holds these positions, that what we can expect is the machines will chase it higher. So let's look at now what we've been saying. We still are holding this case under 3.4% before the next round of short covering. Yields need to fall. Of course, we got the Fed coming this week, so we'll see what they've got going on, how the market reacts. Let's look at iShares 20-plus year Treasury bond ETF TLT. Momentum's positive. The RSI is at 54. MACD's got a positive cross. Momentum Timer Pro, 14 consecutive daily buy signals. We see buy signals across the 1, 3 month, not yet the 6 month, too early for that. We're still holding no position from a trade perspective on this, suggesting that our subscribers wait until the 1 month. That would be right. Oh, wait, it did. I guess I missed that. I'm going to show you why I still haven't updated this, because I'm holding off on the call for a trade on this. For those who are looking for that, I was looking at the wrong thing when I put this slide together. Anyways, Friday's close. I'm going to give you a reason why, if you're looking to buy this, just hang tight. Upside target at 112, downside target at 103. We note that the CTA positioning historical model here is saying this should be a long. Let me give you the case of why on TLT you should just wait a little bit longer. Well, the 1 month volume or 1 year volume profile overhead here, but what do you see right here? Here's a 6 month volume profile. So it tells you everybody here below is buying, but everybody above here has been selling. You've got the 200-day moving average coming down. There's going to likely be you see some resistance here, all at the same level. It's going to coincide with this 200-day moving average coming down. So I would probably hold off on this until you see a break of the 200-day moving average. Now, one thing that is nice, you've got the validation of CTA-Timer Pro saying, look, the machines are going to have to move into long positions at some point, because the historical model is suggesting it is. We also see from Momentum Timer Pro, the momentum signals are pushing higher. So everything's telling you that likely path for bonds is higher, and there's a lot of confidence here, but just wait until you see that thing cross over that red line where the volume profile is at and get over that 200-day moving average, and you should have a lot of confidence taking a position there. Let's go on, and now we talk about gold. We're seeing gold longs build up. Now, many people here are telling us that, hey, gold is overdone. It's not going higher. What I'm trying to suggest to you is the systematic machines aren't done buying, and that's the key point here. They don't care if the RSI is at 70. They don't care if the MACD's gone up a whole lot. All they care about is price rising, is momentum building, and they're going to buy more, and they've got more upside to do here. All right, let's continue with this. Gold needs to move over for 1950 an ounce before the next round of buying, so hang on to that number. Let's take a look at GLD. We know RSI is at 65, so again, most people start getting nervous up here. It's near 70, but again, when you start to factor machine positioning, changes your perspective on this. MACD's got a positive cross. Momentum Timer Pro's giving you 56 consecutive daily buy signals in case you missed the first 55. How about a buy it open? We had this signal November 30th at 163 or 179 is current price. Upside targets at 182, downside at 171. Look, you've got these beautiful signals on Momentum Timer Pro on the 1, 3, and 6 month, all buys. We've been telling you the CTA's thing. The CTA-Timer Pro's been calling go long on this for weeks, more than that even. All right, let's head over to the chart of GLD, and we'll look at gold futures while we're there. Let's hear GLD off the charts. Let's go out to the 5-year window. People are saying, look, this is it. I'm telling you, with the machines keep buying, you're looking to move up here to say 185, 186. How about on gold futures? Now you're talking a move up here back to 1985, maybe upwards of 2000, and you're going to have people. This is what I want you to understand. People buy the most at the top. They play chase, money managers play chase, and retail investors play chase, but the machines still have capacity to buy here, and that is significant. Let's talk about GDX. Now, we haven't had any updates on this for a long time. The last time we featured this on the show, we said look to buy the dips, and so far, Momentum Timer Pro, 17 consecutive daily buy signals. You've got a maxed out 1-month momentum signal, maxed out 3-month momentum signal, and almost a maxed out 6-month momentum signal. And by the way, CTA-Timer Pro, even though the machines don't buy ETFs, they don't do it, what we did is we took the formulas, that historical modeling, and overlaid it on a bunch of ETFs, all included in the report, so you can see how the machines would trade the things that you actually trade. And of course, we note on the report, what does it say? Be long because, well, you should have. All right, let's take a look at the chart on GDX. I think this thing's got a bunch of upside to it, and here you can see it's about ready to break above this dotted purple line, and now you're looking at a move right up in here into that high $34, $35 range. And of course, people are going to play this chase higher. We note the CTA-Timer Pro has been calling this move for a big part of it, and all you had to do was be a subscriber at a mere $20 a month before it goes to 30. All right, let's talk about the dollar, because could we be seeing a position change in the dollar? This is going to be an excellent example of how to use these reports. So what do we see on the dollar? Momentum is negative. RSI is at 38. It's below 40, so it says momentum to the downside. MACD's got a slightly positive cross, but no big deal. We need more validation. Momentum Timer Pro, which smooths all those signals out for you, says 13 consecutive daily sell signals. Say no position. We've got some upside targets, some downside targets, but let's worry about those another day. Notably here, what do we see on the 1 month? A sell max, a 3 month, a sell max, and the 6 month window on and Momentum Timer Pro sell minimum. Look at CTA-Timer Pro, minus 100% short on the fast algorithm, minus 100% short on the slow one. And what do we expect to see in the order here? I want to see the fast one start to trigger, then we're going to see this start to shift on the dailies. We'll eventually then see the slow signal change, and these are going to start building up. So let's take a look at this, because what I want you to see is how to use these in tandem, because they're powerful, powerful tools. And of course, once you understand that, then you realize, of course, the dollar is hinging a lot here on the next Fed meeting. But for the moment, let's look how the dollar, or look how the market's positioning this. Let's go to the 6 month chart here. What do we see? Looking like a very early stage bottoming. And this is way too early to say anything that it is for sure. You notice that there's a lot of upside resistance here over the last 6 months. Why? Because above this red line is where people have been selling, and below is where people have been buying. So what does that mean? All these people below, if price continues to fall, are going to be eager to get out. I still think we have some downside here because, again, everybody thinks the dollar's movements are based on the Fed. Of course, Fed's tightening, the dollar's weakening, so we see no real correlation there. If the dollar heads lower, then the reports are telling you don't do anything. But if you start to see the reports start to shift, well, that means that you're likely starting to see an early stage bottom here. So for the moment, you want to avoid the dollar. But I'll tell you what, when you see those machine positioning, which I'll show you here now on the next slide, let's switch over to that. What do we see? They're in a lull. This looking at TD Securities. So of course we note that machines are in a lull period, which could be the market now sets the direction going forward. So with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.